When you look at a company like First Solar, there's a lot of moving parts with what's going on with their earnings report that just came out for the first quarter of 2025. I've been talking for months on this channel about the impact that subsidies have had, particularly the Inflation Reduction Act subsidies that went in place a few years ago. That's been a huge boon for the company, allowed them to expand in the US, and they've gotten hundreds of millions of dollars of benefit. If that benefit goes away during the Trump administration, that's going to be a huge headwind against First Solar. But the bigger problem right now is that the backlog, the sales for future solar panel production, is not improving. So let's dig through all the numbers. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. The first thing I just want to show is just how big First Solar is. For $14.2 billion market cap, stock is actually up 214% over the past 5 years. Now, things have turned around a little bit over the past year. Shares are down about 27%, but this is still the biggest and most successful solar company that there is today. But let's look at what happened in the first quarter, because I think some of these numbers are pretty jarring. I'll get to their guidance in just a second. But this is their income statement, $845 million worth of sales. They did make a nice gross profit in the quarter. Those margins are coming down just a little bit, but still a pretty healthy margin. I'll get to the IRA benefit in just a second because that is pretty notable. Their operating expenses. This is the thing I think we need to keep an eye on. Can they keep those operating expenses in line with revenue if revenue starts to decline? Right now, we're not seeing that they're able to cut those costs in the way that you would potentially hope for. That's because you got to have sales staff. You got to have general and administrative, the people who are kind of running the day-to-day operations. You have to do R&D if you're First Solar. So as a result of those, you get a decline in operating income from a year ago. A year ago was $243 million. Now you get to $221 million. Net income and earnings per share also declined slightly. But here's the big numbers. This is their guidance for full year 2025. I'll get to some of the tariff impacts and things like that. But there's a lot of things that go into this. You can see that they were previously expecting $5.3 to $5.8 billion worth of sales for 2025. That is down now to just $4.5 to $5.5 billion, a massive decline in their potential sales this year. That is going to hurt every other piece of the business. Gross margin expected to be down. Here's where I said operating expenses not expected to change a whole lot because that's not something you'll be able to ramp up or ramp down with your change in sales or backlog. So as a result, operating income is going to decline. Basically everything is going to decline. This is the really jarring one, I think, for me, is looking back at First Solar. This has always been a company that's had a far, far better balance sheet than any of its competitors. Now expecting to have just a net cash balance of $400 million to $900 million at the end of 2025. That's a decent balance sheet, but that's not that indestructible balance sheet that we typically know First Solar for. So are they losing some of the advantages that they had in the market? Yes, they've been expanding production. Their volume is still going to be 15.5 gigawatts to 19.3 gigawatts. That's a huge range, by the way. And then here's those tax credits. Here's the IRA credits that I was talking about just a second ago. Number 2. So we look at gross margin. The gross margin, basically $2 to $2.5 billion. How much of that comes from subsidies? $1.65 to $1.7 billion are from the Section 45X credits. Yes, you see that right. More than 3/4 of First Solar's gross profit is from subsidies from the US government. That's not a positive position to be in. They would be losing money and losing a significant amount of money on both an operating income basis and a net income basis if it wasn't for this policy. So if that policy is changed during this administration, which is one of those things that's on the table, that could have a huge impact on First Solar's business. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Here's the other thing that I think ends up being shocking. At the end of 2024, they had 68.5 gigawatts worth of expected future module volume. This is their bookings or backlog. Through May 31st, they have sold 2.9 gigawatts, only added a half a gigawatt worth of backlog in the first quarter. And then at net bookings, basically in the next month, was on kind of a similar pace, 0.2 gigawatts. So that leaves you with, on April 29th, 66.3 gigawatts worth of backlog. That backlog is going down as their production is going up. That's not the direction that you want to see if you're First Solar. So what's driving all of these 2025 guidance changes? There's a bunch of things here. There's a bunch of things that are going on, but tariffs have a big piece of it. Risk of policy uncertainty in Europe, India, the United States. But you can see that volume and average sale price changes have an impact of about $100 million to $375 million. Import duties on finished goods going to be 70 to 90 million. Raw material import costs going to be 25 to 55 million. There's going to be a huge impact from tariffs on First Solar. This wouldn't be a company that you think that they're going to have a huge impact from tariffs, but even companies that are manufacturing a lot of their products in the US have some sort of import costs. They're importing some sort of raw material that they need to eventually bring into their manufacturing plants, and that has a pretty big impact on their margins. That's why you see the huge guidance changes. This is the same numbers that we saw just a minute ago, but that's why you see the huge guidance changes in what they're expecting to make in 2025. And here's the thing that I think is a little bit easy to kind of gloss over. If you just look at their earnings per share, $12.5 to $17.5, let's look at $15 per share at that midpoint. And we go back to the share price, $131.85. That looks like a pretty cheap stock. So you just look at these basic numbers that are on Google Finance, 11 price to earnings multiple. Based on this guidance, the forward price to earnings multiple, or the 2025 multiple, is only about 8.7 times. That again looks very, very cheap. But if you pull out this 1.65 to $1.7 billion in tax credits, suddenly a vast majority of that net income disappears. Now suddenly the stock is trading for 30 or 40 times earnings. That is a really expensive stock, especially when you're looking at backlog dropping and potentially margins dropping in the future. So a lot of headwinds that don't seem like they're priced in for First Solar right now. Solar is one of those industries that I think it is going to continue to grow, but it's been a terrible place for investors to invest, in part because these policy changes keep coming up over and over again. The companies in the solar industry are typically very reliant on some of these subsidies, especially when they're manufacturing in the US. That's been a huge tailwind for First Solar, but I think that tailwind is ending and it's going to be hitting the income statement this year, but it doesn't seem like the market is really all that worried. I said that the stock is down over the past year, but I wouldn't be surprised if it falls significantly from here because of all those headwinds, because of policy changes, because of tariff changes. And if we start to see Congress looking at, are we going to change some of these subsidies in renewable energy? That's when I think investors are really going to start running for the hills. So First Solar's results apparently weren't that surprising to the market, but you look at what's going on with the company, what's actually driving the bottom line. I think there's a lot to be worried about. So something to keep an eye on. Let me know what you think in the comments section below. This is a stock that I've owned in the past, but not really one that I think has a super bright future. But love to hear what you think. Thanks for watching, everybody. We'll see you here next time.